3 months ago, the crypto industry was celebrating. For the first time in years, many believed the United States was finally about to establish clear rules for digital assets. The Clarity Act became one of the most talked about crypto bills in Washington. Investors were optimistic. Companies were hopeful. But today, that optimism has started to fade. Political disagreements, a crowded legislative calendar, and growing uncertainty have raised one important question. What if the Clarity Act doesn't pass? Would Bitcoin suffer? Would crypto companies leave the United States? Or would nothing really change? Today, we're separating facts from fear. Welcome to Capital Mindset. Let's begin. For years, crypto companies have faced one major problem. Nobody fully agrees on who should regulate digital assets. The SEC has often viewed many tokens as securities. The CFTC has argued that some belong in the commodities category. This uncertainty has created lawsuits, expensive legal battles, and hesitation from investors. The Clarity Act was designed to make those responsibilities clearer. The goal wasn't to make crypto legal. Crypto is already legal in the United States. The goal was to create clearer rules. So, what happens if lawmakers don't approve the bill soon? The first consequence would likely be more uncertainty. Companies may continue operating without a consistent regulatory framework. Some businesses could delay investments while waiting for more clarity. Others might continue expanding internationally, where regulatory frameworks are already established. That doesn't mean the U.S. crypto industry disappears. It simply means uncertainty could last longer. Now let's talk about Bitcoin. Would Bitcoin crash if the bill stalls? Probably not because of this reason alone. Bitcoin's price depends on many factors: interest rates, institutional demand, ETF inflows, global liquidity, macroeconomic events. Crypto regulation is important, but it is only one piece of a much larger puzzle. Markets often react to expectations, not just legislation. Ethereum and XRP could attract even more attention. Why? Because regulatory clarity matters more for many digital assets beyond Bitcoin. Investors closely watch how lawmakers define different types of crypto assets. Clearer rules could influence how companies develop products, raise capital, and operate in the United States. That is one reason why so many people are following this bill. Here's something many headlines don't tell you. Even if the Clarity Act is delayed, that doesn't necessarily mean crypto regulation stops. Lawmakers can amend bills, negotiate, introduce new proposals, or continue discussions during future legislative sessions. Major financial legislation often evolves over time. Delays are common. So, should crypto investors panic? Probably not. Should they pay attention? Absolutely. The future of crypto regulation in the United States remains one of the biggest stories in the industry. And whatever happens next, it will likely influence companies, investors, and innovation for years to come. If you enjoy clear crypto analysis without hype, subscribe to Capital Mindset. Because every day, we simplify the biggest crypto stories. Thanks for watching. I'll see you in the next video.